Welcome to Behind the Doors, the podcast where we take you behind the scenes of residential real estate investing. I'm your host, Dan Noma Jr., here with my co-host, Marvin Crues.
We're here to help you unlock the best strategies and practice for investors. Whether you're just starting out or you're a seasoned pro looking to scale your portfolio.
We've spent decades navigating the ever-changing world of real estate, and now we're sharing everything we've learned to help you succeed.
From off-market deals to cash flow management and everything in between, we'll break it down and bring you actionable insights that can make a real difference in your investments.
So get ready to open the door to new opportunities and take your real estate investing to the next level. Let's dive in.
What's up, Dan? Episode 2.
We're back.
We are back, buddy. How you doing?
They wanted us back for a second episode. We were so compelling in the first one.
You think we broke records or what?
Absolutely. Absolutely.
Think we're going viral? Or
Absolutely. Absolutely.
So, no, man, it's good to see you. Obviously, we talked a little bit about your background and Easy Street and how we got here. But just to bring people up to speed, I'm going to ask you a couple questions and help folks out. But, for Easy Street, two-sided marketplace. One side, we help real estate agents. On the other side, we help investors, right?
Yep.
On the agent side, it's simple. How do we get them more listings and how do we convert those listings?
Yep.
But also backup cash offer messaging, which seems to be the hot messaging right now, right?
Yep.
But on the investor side, it's putting data behind decisions, right? No more buying Airbnbs, long-term rentals, fix and flips without a sound data decision, right? Ultimately, right?
Yeah.
So let's start on the investor side for a little bit. And of course, we'll get into the agents listening as well. But what is the biggest problem you see today with data for most investors?
Yeah. Well, I think agents too are, it's good for agents to know how investors think, right? Yeah. So I'm hoping that they can grasp on that too. But I think, the biggest problem that real estate investors face is lack of data and information to make sound investment decisions. Like that's the ultimate premise, right? Like and to unpack that idea a little bit. If you wanted to buy a piece of real estate, right? Like how would you start,
Right.
And a lot of people that I talk to, they would go read a book or listen to a podcast. And, then they would get into contacting a local real estate person. And I think, we talked about in our last episode that the idea of using a subjective opinion to make a buying decision doesn't work in anything, right? It doesn't work when you buy stocks. It doesn't work when you buy shoes. It doesn't work when you buy cars, right? There's no way that a subjective opinion of just one person is good enough information to make a buying decision, to invest thousands, millions of dollars, however much you're investing, it's big to you, right? And to invest that based on an opinion kind of irks me. It a little drives me crazy because good data and information is available. It's just not easy to get. And that is the premise, right? That's the ultimate premise.
And just to be clear, what is good data, right? So when you think about the different strategies, you got fix and flip, you got room rental, which is starting to really take off. You have short term, and then you have long term. So is there a difference in what is good data depending on your strategy?
Yeah, there definitely is, right? When you think about where your data comes from, you got to think about how much of the market share are you getting, right? And the easiest analogy I'll give you is when you think about rental properties, right? So rental properties, there's a certain number of rental properties that get leased or trade on the MLS. Then there's this whole world of real estate rental properties that trade off market. Right? They aren't on the MLS.
You didn't even know the home was for sale.
You didn't even know it was for rent, right? And it somehow got rented, right? There are rentals on people's street that people don't even know that are rentals. How do you get the information on that data, right? To actually know that you're using the right comparable set of information to come up with your rental rate. Right. And that alone, right? That just having the right rental data alone can be a huge difference in somebody's performance of their real estate portfolio.
Right, because you could actually be undercharging, not necessarily overcharging, right?
Yeah, it's mostly undercharging.
Right, exactly.
Yeah.
Right. Did you realize you can get $200 more a month for this property just because you're comparing it to everyone around, not just what you saw in MLS?
Right.
Yeah, good point. Yeah.
Yeah, and it's expensive, right? Data in general, like data like that is expensive to buy. And then it's not available to everybody, right? That's the other thing. It's a weird, like, data's a weird thing. It's just not available, like, unless you know where to go find it.
That's expensive too.
Yeah, you gotta like know what you want, know who like can aggregate that type of information, and then somehow seek it out, and then they price it. And like the harder the data is to get, like the off-market data is so much more expensive than the MLS data, yet people relied on just MLS data numbers to make tons of buying decisions, right? And that kind of drove me nuts.
So if you remember last episode, we talked about this product is for if you have 50 grand to 5 million.
Yeah.
Right. So you're talking mom and pop investors all the way up to institutional buyers. Is there a difference in data that the institutional buyers are doing differently than mom and pop? Does that make sense?
Yeah, for sure. And the reason that institutions or big companies that buy thousands of homes, they use data differently, and that they use the data to support their buying, right? They're spending other people's money to make investments,
gotcha,
right?
Yeah.
So when you're doing that, you've got to be able to back it up, because someday somebody's going to come knocking and they're going to go, Marvin, you bought this house. You told me it was a good buy. How did you even get to that number? Because it doesn't make sense at all now, right? Like, and in order to acquire the assets for these institutions, we had to provide them, still do provide them with a booklet of information, of data, so that they could make a sound investment decision and back up the claim, right? That this is a good buy. The idea of it just being, my opinion of it being a good buy wasn't ever even considered, right? They could care less that I had an opinion. My opinion does not matter, right?
Right.
What matters is like, does it actually make sense? So I think that's a big deal.
Right. So at the end, institutional buyers are buying yield, right?
Yeah.
At the end of the day, they're buying yield,
Right.
But they're not just buying the home with emotions. They're putting facts and data behind that decision, right? That's ultimately what you're saying.
Yeah.
And you can now pass that on to the mom and pops.
Yeah. And we maybe unpack like the yield thing a little bit, because I think there's, people are probably like, what the hell is yield? So, I mean, it's, I actually looked the word up the other day just to see like how old it was and stuff. I mean, yield goes back to like, it's like an agricultural word is where it started, right? And so if a farmer planted a crop, right, and they planted corn.
Are you nerding out right now?
Yeah. they planted corn. They, the return on that corn, like the field was the yield, right?
Yeah.
That's how it starts, right? And then yield just started to evolve into like other things. And so it's the return on our planting of our seed, right? And our dollar investment. And so, yield comes in all ways, shapes, or forms, right? It could be a cash on cash return. You hear people talk about cap rates, internal rate of returns. Everybody has a different way of analyzing real estate, right? And that can be subjective. Like that piece of it can certainly be subjective.
Correct, yeah.
But, the return on investment, whatever it is, however you quantify it, doesn't matter. But that's what people are buying, right? And you've heard me say, like, I'll buy a doghouse if I can make money on a doghouse, I will buy the doghouse. Like, I don't care where it is, what the location is. To me, it's 100% about yield. And other people are not that way. I mean, some people care, like they want to be able to drive to the house and see it once in a while. Like they're more comfortable investing that way.
Right.
Like I have investments that I've never seen. I've never seen them at all. And I'm totally comfortable with that.
Oh, that makes sense. Let's go double down on the yield.
Yeah.
What should investors be looking for? When you think about, I know I hear a lot of investors talk about, if I can get 5, 6, 7%, I'm doing great.
Yep.
Do you have a minimum or a preference that you
Yeah.
coach people to?
Not necessarily what they need to get, right? Like, I don't think that that's the answer. I think the answer is like, how much do they want to make a return on their money, right? So if they were to invest $1, like the simplest way to think about it is, if you're going to invest $1, how much on that return on that dollar makes sense for you, right? And some people, that number is a big number. Like, they'll come in and they'll say, I've got to make, double digits on every dollar that I've got. Okay, there are opportunities out there that do that. That does happen. But typically, with the higher the yield, the more risk that you're taking, right? It becomes a riskier investment. So you've got to really, what you're doing in real estate investing, I think, is really just assessing risk and coming up with your own risk profile, and you make a decision based on that risk, But I mean, even today, like, you can go out and you can buy a bond at the bank, right? You could buy a savings bond, government bond, whatever you want. You can buy a bond. And the bank's going to give you a return on that bond, right? They're going to guarantee some interest on that bond. Same thing, right? Like, and that number is really small, but that's where you start at. And that's like the lowest risk thing ever, right? Like, there's no risk in that at all.
Right.
Go open the savings account. You're going to get a return on your savings. It's modest, but you're getting something, right? Because the bank's lending that money out to people, and that's how they do that. That's the lowest risk investing possible, just opening a savings account, right? And then all the way up into, flipping homes or, pad splits, stuff like that we work on today. They carry a little bit more of a risk, but you're going to get a better return. And it just depends on your risk tolerance, but you got to be able to make a decision on that risk that is like quantified by something. Can't be like, oh, Marvin likes this street, and therefore, I'm going to buy this piece of real estate. It's got to make sense, right? There's got to be some data to back that up in order to assess the risk. I think that's what we got to get to.
Okay. Yep. Now the investor, they got their yield.
Yep.
Now we got to build their buy box.
Yeah.
Right. Where do they want the home? Right. Characteristics of the home. Right. What are they going to do with the property? Again, you go back to short term. That's the Airbnb model. So they got to have, maybe they want a minimum 2-bedroom, 3-bath. Long term is going to think a little bit differently. They don't want a larger lot just for a maintenance perspective, or they got to think of, even to the point of the area in itself. Do these people in this area, what do they make? What's the income? You got to think of a lot of these things. So let's just talk a little bit more about the buy box itself. Can you elaborate on that from a data perspective?
Yeah, I think that where it starts, though, is the strategy, right? That's where you started, was like, okay, what is your strategy? Yeah. And, the thing that I've always said to real estate investors, right, and there's different schools of thought on this all over the board. There's no right or wrong, right? But I think that real estate investing is cyclical. I think that you can't be a one-trick pony in real estate investing, right? Okay. That there are certain times where fix and flip is the best strategy, and carries less risk than in other times. And if I can make a bigger yield in a low-risk environment, then I'm going to look at fix and flip as the best opportunity, right? Yeah. But if it's long-term, I want somebody to pay off my mortgage, and, I want to own this piece of real estate. So when I retire, I just have this nice little rental portfolio that's spitting out, rental income to me every single month. Then it's probably not fix and flip, right? That's not your plan. You got to think about buying properties and holding them long-term, right? And that's a different strategy. That's just a different plan. The Airbnbs took off, I feel like forever here. They've been in Phoenix, but in Scottsdale especially. When I bought my first Airbnb, there was 300 Airbnbs in Scottsdale. 300. Now there's over 10,000 Airbnbs in Scottsdale. 10,000, wow. Dude. So like,
competition is just
oh my
fierce.
God, it's just, but again, it was cyclical.
Right.
Like people got very excited about the opportunity, the double-digit returns that we were getting, and the fact that we've got all these great amenities and events and things that happen, and I can own this thing and I could rent it half of the year, and I get double the rent. And that's kind of how people thought about them and just started purchasing them. Now that market cycle's passed, right? That so to buy one of those right now. There's certain areas and pockets that they all make sense in, right? But it may not be just generally the best time to do that. It's just become with like a high risk thing. So, it starts with strategy, and then the what are you going to buy, right? Are you going to buy single family homes? Are you going to buy condos or townhomes, multifamily? Like what asset class are you going to consider, and why, right? Because there was a time like, say, maybe 6-7 years ago where multifamily was pretty cheap. Cost per door of the multifamily was actually really cheap. And they were renting really well still. And it was a really good opportunity to get into, B and C class, like lower maybe class real estate, multifamily investments.
Right.
So, asset class becomes kind of the next thing. And you gotta, if you're gonna dive into real estate investing, I think you gotta make sure that you're looking at the market cycle and figuring out okay, what is my exit gonna be? How long do I wanna own this thing? What do I need on my return to be? What am I comfortable with on a yield?
Right.
And then, what you're gonna buy is really a decision based on risk again too, And it even goes to bedrooms, bathrooms, square footage of the property. Does it have a pool? Does it not? A garage?
Right.
All of those physical characteristics of the property are there's quantifiable information that you can use to make a decision, So does a 2-bedroom in Dallas rent as well as a 3-bedroom? I don't know.
No,
right?
no.
I could tell you, but
with data we can tell you.
Right. But if you didn't have the data, how would you know?
Yeah, exactly.
Right. But you could see the cheapest 2-bedroom in the market. And if I could buy it at that price, does it make sense?
Yeah.
And so you've gotta be able to really build, what you're looking for first, right? And start with, the physical characteristics of the property, the geographic location, schools, right? The schools are obviously a huge factor, but the demographics you hit on a minute ago, are there jobs coming to the market?
Exactly.
You know what I mean?
People to rent the home out, right?
Yeah. A few years ago, did you know anybody moving to Arkansas? Now, it's one of the it's like the shipping capital of the world.
Yeah.
There are more trucks running in and out of Arkansas. Walmart's there. You've got all of these giant corporations that have moved there because it was cheap, right? What if you had the foresight to buy those houses for $35,000 that are worth $500,000 today? That would have been cool,
To that point, let's go there. So most mom and pop investors, look, we own 10 homes or less.
Yeah.
Right. So we're not deep in pockets. Let's just be real. We're not deep in pockets. And I bring that up because institutional buyers, the big difference is they have deep pockets. When you have deep pockets, you can afford a few of those homes to fail and not turn out the way you.
Yeah.
But when you're a mom and pop investor, I haven't been always lucky, right? I always seem to be behind. Man, I moved to Austin too late, or I moved back to Scottsdale and now everything's extremely expensive. So data will help us narrow that gap and shorten that risk. Are there areas that folks should avoid, in your opinion? Are there other factors to think about when you think about real estate? Where I come up with that is to your point of Arkansas, but, I think politics play a factor into when you should avoid real estate. Are there other things that when you think about what to avoid? Like
legislation, one of the big ones now, think about, Airbnbs, right? The 30-day rental policies that you see out there now, right?
Yeah.
When we started doing Airbnbs, nobody knew about a 30-day rental policy. There was no such thing. It just, you could just rent your place. It was yours. You could rent it. Now HOAs have gotten smart around this,
no
right?
party
'Cause
houses.
they don't want the, for whatever reasons that they don't want them there. There's a bunch, right, that they don't. Now they're restricting, that now, like in where we're at in Scottsdale, you have to license your property, right? In Las Vegas, they've been licensing Airbnbs since like day one. The casinos got involved in it early. And those licenses for Airbnbs in Las Vegas are like really valuable. There's only a fixed number of them, and so that's a totally different kind of thing, But yeah, I think to your point, you've got to like for every bit of like the risk profile of an investment, it starts at like physical, geographical, legislation, demographics, all of those things. If you miss any of them, you miss, right? Like you run the risk of a miss.
Yeah.
And, in my opinion, it's like, why would you run the risk of a miss?
Right.
Like why? Right. I mean, if the data is available, in our case, it's free. Why would you miss? Like, it doesn't make any sense, but people miss. Like, they'll just do it. And, people have different risk tolerances, right? But for me, it's like, I'm willing to take a risk as long as, like, I've got some information to back it up, and then I get a little more comfortable with it. Yeah.
All right. So you got your yield.
Yep.
You got your buy box. You know where you want to be. Now you're pulling in data from Easy Street Offers, right, to make that sound decision. Now what? Do you stick to the plan? Now, talk about that. Like how, most people, we always talk about year two stabilizing, letting things settle.
Yep.
But can you elaborate? You always talk about stick to the model.
Right.
Let the audience know what you mean by that.
Yeah. I mean, I think that real estate investing, at its simplest form, like the way I was taught real estate investing was that it was meant to be passive. Right? Like real estate investing is, people have made it a job, right? Where they're doing it full time, they're flipping full time, or they're wholesaling full time, or whatever. But fundamentally, right, it came from a world where like you would own a couple of rentals to create passive income for you and your family, right? So I think, you've got to figure out like what real estate investing is for you. And if real estate investing is just that, right? Real estate investing is a path to wealth. Then I think you got to do it in a way that is very risk adverse, right? Like I want to take a ton of risk in this, but I want it to be easy. I want it to be like an automated process for me to be able to get that. Maybe like, to compare it to something, it'd be like buying stocks versus mutual funds. Like you can buy mutual funds, but the return on those mutual funds is like modest.
Right.
You're getting a return, it's modest. You can get into some high risk stocks, like those guys that do day trading or, trade penny stocks and stuff like that. Like that's high risk game, right? They know nothing about these companies and they're investing, tons of money with them. And, so I think that's the same way I think about like real estate is that, if you're going to invest in real estate, do it in a way that's like easy and that's got to be easy for you. Right. And so a lot of like, there's a lot of these like home flipping shows on TV, people will go and they watch a home flipping show and they're a flipper. They think, oh, I can do that.
They do it in a weekend too.
I can do tile. So therefore I can flip a house like that, that could happen. Or I know a contractor, so I can flip a house. Like that's what they think. But flipping a house is hard. Like flipping a house takes so much time to do, right? So you got to make a decision based on like, what is it that you're trying to achieve? Am I trying to achieve passive income? If that's the case, then like there are a couple strategies that you can do that are like so simple and easy. Where I see real estate investors stumble a lot is when they deviate from the plan, right? So they never thought about the plan in the beginning, right? And they're just grabbing at whatever the next greatest opportunity is. Right. But then they get lost in that and they miss like what is the most consistent or kind of the true path to whatever their original plan was. Does that make sense?
Oh, it totally makes sense. I use your fix and flip example, right? Like you see it on TV, so now you go buy a home relatively cheap,
Yeah.
but then you knock that wall down, and
Yeah.
you're like, uh-oh, I didn't account for that expense.
Right.
I didn't account for this expense.
Yeah.
And then to your point, what am I going to sell this thing for?
Right.
And did I compare comps to the market, right? So
Yeah. And did I miss 3 rental opportunities while I was flipping this house, right? I could have
right.
used that money to buy a couple rental opportunities with no headache, and I turned it over to a property manager and just let them, manage the asset for me. So, I think that, consumers have to, if you're going to be a real estate investor, you've got to at least have the plan in mind, right? You've got to have at least what your plan for this capital that you're setting aside to invest. How do you want it to grow, right? And then what is there, like, your pain and your time tolerance? Like, I don't know. I see a lot of times that people would go buy flip properties and things like that work full-time jobs. And I'm like, man, you just don't have the time, and then delays and all those things start to happen pretty quickly. They're wishing they never did. And then they never come back to real estate investing because they just chose the wrong, like, it wasn't the right fit,
Right.
it just wasn't the right fit for their lifestyle, their life.
Yeah. Most mom and pop investors, to that point, right? They have a different job.
Yeah.
They're doing something else. They're a lawyer, they're a doctor,
Right.
or they're us, right?
Right.
We're busy doing podcasts right now.
Yeah.
And we don't have time to do all of this. So,
Yeah.
Now we fast forward to the solution. Well, people are going to be like, all right, I hear you. I know what to do now. I got my plan. I got my buy box. I know areas to avoid. What's the solution? This is my favorite part, by the way, but what's the solution?
Yeah. I think the solution really starts with, like, modeling, right? You've got to have the right model and be able to evaluate a bunch of properties really fast, really efficiently, so that you can make, a sound buying decision based on your model, right? And so, that's why we built the product the way we built it, right? We built the product so that if you were busy 8 to 5, and, in like my case, I've got 8-year-old triplets at home, right? So my work life starts really at 5 o'clock when I get home, right?
Exactly.
Like that, I'm busier then than I am during the day. Yeah. So I don't have time to evaluate a real estate deal, right? As someone an agent sends me a real estate deal and they go, hey, this is a good deal. No information, no data, no anything. Now, as a real estate investor, I have to go seek out all of that stuff, right? I got to do the risk assessment on my own.
Yep.
So, and I'm doing that like half blind. I've got half of the information that I need in order to make a real decision.
Right.
And so now I'm out there just running around trying to make a buying decision based on half-baked information, right? And that's where mistakes happen, right? And so the solution really is the fact that you've got to, there's tools available, right? We've got a tool. There are tools out there in the market. There's tools, and like a woodworker needs tools, a firefighter needs tools. Everybody needs a tool. Like, if you're going to be in real estate investing, you should have a tool, right? And the best in class tool for you is the one that meets your, like, standards, right? And the one that you can actually use. It's like, if your real estate agents out there probably hear people say to you all the time, like, in real estate, there's like hundreds of CRMs, hundreds of them. And what everybody says, like, which one makes it, they all do the same stuff, right? They're little nuances, but they all generally do the same thing.
Right.
But they all go, the best one is the one that you'll actually use, right? Same thing with this, right? Yep. So, the way that we designed this tool was so that real estate investors could, get access to 2 things. One of them is like a supply, so a unique supply of inventory.
Yep.
The second one was, underwriting and evaluation as a service, right? So that I didn't have to come home from work, chase the triplets around, and then go do a bunch of research and try to figure out if this was the investment for me while I'm like got one eye open and I'm like wiping the Sandman out.
Right.
With like half-baked data. That is what people have been doing, right? And I just found that to be a little wild. So I said, well, why don't we give them a tool and let them evaluate a property through their eyeballs. Right. And I think that's like, if I think about our tool today, like the most unique thing about our product is the fact that we underwrite and evaluate subjectively. Like every buyer on our platform has a different buy box, and they have a different model, and they have a different strategy. And we've taken all that into account. So when they see it, right, visually, they see it through their own eyes. And they see it the way that they would have done it themselves if they would have had the 10, 12, 15 hours it would have taken to evaluate it. But now they're getting it like that, right? They're just seeing it the way that they would have gotten it themselves.
No, I love that. And I think that's my favorite part about the tool, right? One, I know when I see that property, it's going to match my yield. That's the biggest part, right? It does match my yield. But also, when you talk about modeling, it's modeling for expenses as well, right? Like it models for vacancy. It models for what to charge, like what to do with the home. So if you're a short term, right, what am I going to charge in April than I am going to charge in July, let's just say, for example, or I'm sorry, December, for example. So it models all the way through. So it accounts for everything that can happen with that real estate. So I love that. What about investors? Like, I think about Arizona. There's a lot of people that move here, but that doesn't mean the best yields and returns are in Arizona.
Oh, yeah. I mean,
right?
I think that a lot of people got stuck on the idea that they had to invest where they live. You know, and I don't even know where that came from.
Like, I think they just want to see it and feel
maybe,
it and drive by, right? Like, I'm not going to spend $300,000 on a home and wait, is the home still there? Like,
yeah. See, that's where you and I are different, right? I mean, that just makes us different. It doesn't make me right or you wrong. Like, it just makes that we're different in the way that we have a tolerance for risk. The way I think about real estate is that it's a number, right? I like I shared earlier, I have real estate that I've never seen. And I'm totally comfortable with that. What I do see, though, is I see a P&L, right, every month, and I know that I'm getting this return on my dollar. So my $70,000 that's sitting over there in Nashville is working at a 8% return while I'm sleeping at night.
There it is.
You know, and that's how I think about it. So yeah, I think, again, that's one of those like subjective decisions that an investor has to make. You know, are you comfortable investing outside of your home market, you know, or a market that you're not in all the time? And, you know, that does take a little bit of a different thought, right? And some people are just different.
Yeah, and it could possibly because they don't have a tool.
Yeah.
Right? They don't have the modeling and forecasting that we provide to them. So I think, if you had a tool, you probably sleep a little bit better at night knowing, it's okay to buy a property in Georgia, at Arkansas, Pennsylvania, for example, knowing that I'm getting the return.
Right. Yeah, I think it's important that, you know, you really just focus on building a plan that's going to work for you long term, right? Like, you know, and honestly, that was one of the premises that I started my original business on, is that, you know, you go meet with a financial planner to go buy stocks, right? Those people have licenses. Like, I don't know if you've ever like looked at the book that they take to take like a Series 6 or a Series 7 license to be able to sell securities.
Right.
Like, that book, a lot of it is, you know, coaching the customer into understanding how to evaluate the risk, right? But then you go invest that same $100,000 into a piece of real estate, and nobody's giving you that information, right? Nobody's like coaching you to say that this is going to get you to your goal or it's not, right? Like, there's no financial planner of real estate. And I think that's kind of what we do. You know, I think that we are giving consumers a different look at real estate investing so that they can sleep at night knowing they made a sound decision, but it's also in line with like whatever their strategic plan is. And that's where I think the real, you know, the real meat of real estate investing is, right? Is in that.
Yeah. No, I think in closing, I think that is what I loved, is the companies was built on the thesis of you, regardless, again, you got 50,000 to 5 billion.
Right.
You can sleep at night knowing you made a sound investment decision because it's data backed up. It's
Right.
factual. It's
Yeah.
not just MLS.
Right.
It's total view. Right.
Yep.
You're getting total view and understanding of what's happening in the radius of that real estate because it changes. A lot of conversation today about investor side, but there's one little piece I just want to close with, and that's the agent side.
Yep.
Talk a little bit why it's important that, you hear a lot about off market and on MLS. And part of what we're getting in this platform is off market deals.
Yeah.
Just close on why is it so awesome and cool to really be thinking about off market versus MLS as an investor.
Yeah, for the sake of the investor, right? When you're looking at off market or pre-MLS inventory, is that you've got less competition. Right. You're getting an opportunity to make an offer on a property before the entire world sees it. Right. I mean, as soon as the property goes on the MLS, it goes on Zillow, Realtor.com, all these places. It's a big deal. Right. And that is going to cause, a lot of people to have eyeballs on that property. Right. With an off market or pre-MLS inventory, it's very proprietary, right? Yeah. It's like you got to be part of the exclusive club in order to get access to it. And then you've got to have a good value proposition to provide the seller on the other side. Like, it's got to make sense for the seller to want to go do that. So, it's, I've had like all kinds of different strategies. To be honest with you, I don't think, right, about real estate investing that it's better bought off market. I don't think that it's better. Right. I think that you got to take a full assessment of everything, right? And consider both what's on the market and off market to be able to make a decision. And regardless of where it came from, like it shouldn't matter if it was on the MLS or not. Like not on the MLS just means we're going to have less competition. We just evaluate the property a little bit differently. Then if it is on the MLS, it might be the best deal ever. It just we never saw it off market. Right. And now it's been, posted on the MLS. It doesn't make it a less valuable deal. It just makes it public. Yeah. Right. And there's nothing wrong with either. It just, it's all just a different asset class or a different inventory pool to shop at. Really.
Yeah, that's awesome. No, that's a great conversation, man. Now they got their yield, they got their model, they got their buy box. But the best part is they got the data to make the sound decision, and they can do it across multiple markets. You don't have to invest in your backyard. You can look, and we can support all models. So whether you're fix and flip, room rental, short-term, long-term, you need a plan, you need data behind a decision. And in closing, you can get off market. So you got so much insight, not just MLS. Take advantage. By the way, that's what the institutional buyers are doing.
Right.
They're buying yield.
Right.
And they're looking for off-market deals all the time. Let's pass that on to mom and pop.
Yeah. Give them a chance.
Let's give them a chance. Cool, bud. Good to see you.
All right, man. We'll see you next time.
Later.
Thanks for tuning in to another episode of Behind the Doors. We hope you found today's insights valuable for your real estate investing journey.
Remember, real estate success doesn't happen overnight, but with the right tools and strategies, you can build long-term wealth and create passive income.
If you enjoyed the show, be sure to subscribe, leave us a review, and share it with others who are passionate about real estate investing.
Don't forget to follow us on social media for more tips and exclusive content.
Until next time, keep unlocking new opportunities, and we'll see you on the next episode of Behind the Doors.